Hey traders, Jason here from Leavitt Brothers. Happy Monday, happy Martin Luther King weekend. The market has posted 4 consecutive up weeks. This has given us many really good long trades. Stocks that were left for dead have bounced 20% or more, and a few that held up have built on their gains. In this video, I'm going to offer a few trading ideas for the next few weeks, but remember, the market has moved up a bunch, and its rate of ascent just simply cannot continue. Don't just blindly buy the stocks that I'm going to talk about here. Okay, if the market continues up, I'd expect these to do well, but the market is due for a rest sooner or later. Okay, so first I'm going to go through a few of the stocks that we've traded at Leavitt Brothers the last couple weeks. Okay, this will give you an idea as to the types of setups we trade. Then I'll offer a few ideas. All right, here goes. All right, so AIG is the stock we played. Weak stock, downtrend, but was forming a nice base. You guys know the market was down here, and the fact that AIG held its low and started forming a pattern was certainly interesting to me. So, so it kind of moved up, got rejected by a previous high here up near 40, and then ended up breaking out and going up to 44. But if I zoom in to show you exactly how you could have played it, again, here's resistance at 40. Let's zoom in with the 60-minute chart. This resistance level at 40 is right here. So what happened is the stock moved off its low, got above its 50, came back down, tested the 50, the blue line is the 50, came back up, solidified resistance, came down again, tested its 50, and then it moved up, broke out, and it rode its 21 up. The orange line is a 21. Okay, I do this very often. Okay, when I find a stock that I like, I don't just sit back and wait till resistance is taken out. I like to zoom in, look within the pattern, find a moving average which is kind of in sync with the stock, and try and get a low risk entry there. Okay, so there was, once it solidified itself above its 50 here, you could have looked for an entry here and put a stop right below the 50, and you could have had a tight stop. Then when it moves up to resistance, you're doing one of two things, or I guess you'd say one of three things. Either resistance is going to hold and you could sell, resistance isn't going to hold, and you could just hold it as the stock breaks out, or you could add as the stock breaks out. Okay, so again, when I find a nice pattern I like to zoom in, find a moving average that's very much in sync with the stock, and then see if I can get a better entry. Okay, because oftentimes if a stock doesn't break out, then hey, at least I was able to buy a buck or two lower, and I could make a little bit rather than hey, I just got caught on the wrong side of a false breakout. All right, Electronic Arts, weak stock, trending down, really good company, but stock just got killed. So I had profiled it back here when it was up in the high 70s, really low 80s here. It broke out, went to my target pretty quickly. It was just less than 1 week that we were in the stock before it hit its target. But again, let's zoom in over here and see what was offered. Okay, so if I zoom in, what I see here is I see a stock gets above its 50, comes back down, tests the 50, goes back up, comes back down and tests 50 again before it takes off. Okay, so I really like the fact that it got cupped here by its 50, formed a resistance level here. Okay, and then we were able to play it. So you could play resistance. In this case, it gapped up, so it's harder to play. But once it gets up above its 50 and comes back down and successfully tests it, then I start thinking like, hey, there's a low risk entry down at the 50. If I can get in like down in this range, then when it gets up here, I'm either taking profits or just holding, or adding to my position as it breaks out. In this case, the stock gapped up and just ran, so I just kind of held on. Okay, but I really like the idea of buying within the pattern, because then you just have a much lower risk entry. Another one we played was FAS, which is the leveraged financials ETF. I'm just going to show you the 60-minute chart here. As you can see, zoom in with the 60, it gets above the 60, comes down, not the 60-minute chart. Here's the 50 moving average on the 60-minute chart. You can see that stock gets above the 50, tests it once, tests it twice, and then if you put a resistance level here, it breaks out and then rides its 21 up. Okay, that's another one that we played. PS is a stock that is currently on our list. I tend to keep stocks on the list until either their stops or targets get hit. Okay, so another example of a stock that even though it was weak here in December, the market was down here way below its, November lows. So the fact that it held its low told me that, hey, this is forming a nice wide base here. So I want to zoom in, see if I'm getting good entry here. Okay. So the stock actually did move up, bounced right here off its 21, came up, bounced off its 50, and then moved up again, and then it rode its 21 all the way up. Okay. So if you go back to the daily here, I was buying like over in here. Okay, which meant when it got up here, my risk is much less. Okay, because to be honest with you, in this market, in today's market, with it's really volatile and we don't really have a strong uptrend in place, I don't really want to buy here at 26 when just a few days before that it was down at like 22, 23. I'd rather buy here, and then up here I'm either taking profits or just letting it go. Okay. Here's another one, Zendesk. Again, another one that was in December when the market was far down, making lower lows. This stock held up well, was forming a nice base, looked like just a classic, setup here for a nice wide base between 50 and the mid 60s. But again, I don't want to wait until it takes out like the high here in order to buy it. I don't want it to have to go up here and then come back down. Some traders will look at this and say, hey, if it can come back up here and then come back down again and solidify that resistance level, then I'm going to play a breakout. Well, I don't want to buy over here when I could have bought over here with the defined stop. So if I zoom in with the 60-minute chart, again, we have a situation where it kind of comes up, bounces off the 21, comes up again, bounces off the 50, and then bounces off the 50 and rides its 50 up and keeps going. Okay, so instead of waiting until it takes out resistance up here, up in the mid 60s, I'm buying here with a clearly defined stop. Okay, so if it moves up, great. If it fails, I have a really tight stop. If it moves up to resistance up in this area here, then I'm either taking profits or holding on or maybe adding to my position, but it's nice that I got in here first. All right, now let's look at some stocks that I currently have on my list. Okay, CGC. Okay, we played two of the pot stocks. We didn't play this one. I kind of wish we did. We played Kron. We played NBEV. This one we missed. I don't know why. But anyways, so the stock has run up. It's forming a pattern here. Okay, I'm looking for a move up into the mid 50s. I'd prefer this pattern to move sideways some and mature. Okay, because it ran up so much and it's only taken like 4 or 5 candles to form this pattern. I prefer the stock move in here for a week or so before it tries to make its move. But in any case, I would rather buy a dip within the range with a tight stop than a breakout. So if I zoom in now with the 60-minute chart, what I notice here is that it got above its 50 and its 21 here. It rode its 21 here, tested the 50, and then rode its 21 all the way up. Okay, so if we get another week where this pattern forms, that would be great. Okay, we don't know if that's going to happen. So going into next week, we could have an entry here down at 43 with a really tight stop. If the 21 doesn't hold and the stock drops back down, then we can get perhaps an entry at the low part of the range plus at the uptrending 50. So that would be my an area that I'm looking to do business. Okay, it's just something we're looking for over the next week or so. Hopefully we do get this dip, because I really don't want to chase it because of the it's run up so much and this pattern isn't very mature. Okay, here's IQ forming a nice base. Okay, the classic base pattern. It'd be nice if it was bigger. Okay, I'd love like one more dip here and then move up and break out. Don't know if it's going to happen, but that's kind of what I'm looking for. If I zoom in with the 60, you have a stock which has it rode its 21 up. It got capped by its 50 here, but then got above it and is now up, obviously at a new high. So going into next week, look for a dip down to the 21. If that doesn't hold, I'll be looking for possible entry down at the 50. Okay, it's just a stock I'm checking out. I think we will get an entry at some point. My hope is that the market moves down a little bit and we get a better entry, because I don't know. I'd rather not chase it higher. Here's ZS, big messy stock, big candles, a lot of overlapping candles. But if you look at the candles, a lot of candles are, you know, open at one extreme, close at the other. So that's nice. There's not a ton of intraday movement. We have a pattern here which is forming. Resistance level up at 46. Looks decent if you can get past the fact that the candles are really big and overlapping and such. Okay, so if I zoom in with the 60, you can see, you know, big consolidation pattern forming here. The 50 supported the stock here, 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 here. Okay, now the stock is traded sideways long enough for all the moving averages except for the 200 to be trading flat in the range. So from here, we could have an entry at 45-ish if the 50 holds. Okay, if it comes down here and does one of these things, we could have an entry there. If 45 doesn't hold, then we might have a move down to the bottom, and we might have to look for a possible resistance from the 50. What if the stock moves down like this, comes up as the 50 rolls over like this? What if this thing kind of gets rejected? So we're gonna have to look out for that. Okay, so right now it's trading in a range. It's trading in the middle of its range. So we have a possible entry in the middle of a range here, right at 45, where all the moving averages intersect or sit. But if that doesn't hold, then we have to look out for a possible resistance on an attempt to move up. Because if that resistance holds, then we might be, you know, looking at lower price. Maybe we get an entry down at the 200. I don't know. But nevertheless, it's on my list. It's something I'm checking out. Billy, messy chart. You can argue that, you know, it's kind of hard to even chart this thing, but you can, if you look, you kind of have an uptrending channel. Okay. On this chart, there's no clear resistance, support, anything like that. Okay, it just kind of looks like a messy chart that's slowly trending up. If you zoom in with the 60, this is where it looks kind of interesting because you have a move up, it comes back down twice, boom, boom, it gets supported by its 50, and then it moves up and it rides its 21 up. So going into next week, you could look for an entry here at its 21. Yeah, at its 21. If that doesn't hold, then I'd be looking for an entry down here at 16, which is its 50. Okay, just a stock on my list that I'm checking out. Okay, a couple more. Square, I posted this I posted this last week at Leavitt Brothers. We have a large base here. I think the stock, if the market continues up, I think the stock's probably going to go up to its high, not its high, but its recent high at 80. I wouldn't chase it here, but if we zoom in with the 60, you could see that it got supported. I mean, it kind of ran its 21 up, flattened out, and then once it, you know, a lot of times the stock will run up, trade flat until a certain moving average kind of comes up and supports it, and then it takes off from there. So I wouldn't chase this one, but if you get a dip, you know, if the market corrects for 3 or 4 days or has one of those weeks where it's down 4 or 5 days or 3 or 5 days and we have a little bit of weakness, then maybe we'll get a chance to buy a dip back to its uptrending 50. AQUA, just going to show you a couple more daily charts what I'm looking at. Okay, really weak, gaps down, forms like a 3-month base, broke out on Friday. Okay, this 10.5 area is still resistant. So even though it broke out at 10, we still have resistance here. But that's not a bad base. Certainly has potential, getting scooped up by its 50-day moving average. Okay, so check it out, put it on your list, zoom in with an intraday chart, see if you can find a low-risk entry. BE, very, very volatile stock. The stock has moved all over the place, could easily move, you know, 4 or 5% in a day. It's a weak stock, still trending down, but it's moved off its low here and now basing at a higher level. It's been basing for about 2 weeks. So again, zoom in with a 60-minute chart. Maybe you can find an entry here. We got resistance and the 50, all, you know, both pretty much at the same place. It's a volatile stock, so if this thing moves, I mean, moving from 14 to 16, 14 to 18 is very doable. Okay, so it definitely has potential, but it's a weak stock, so keep that in mind. Here's Boyd. A lot of the casino stocks have done really well lately. Stock trended down, 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 rolled up, formed a little wedge pattern here, and then broke out on Friday. Again, zoom in, 60-minute chart, 30-minute chart, try and find a moving average that is in sync with the chart, in sync with the stock, you can probably find a decent entry. I think if the market does well, the stock's going to go back up to 30. Electronic Arts, we've already played it, but it moved up, based for 7-8 days, broke out on Friday. Again, if the market continues up, I think the stock goes up to 100. So you don't know if the market corrects. We might get like a little bit of weakness here and a chance to buy it down near 90 for a move up. Okay, so check it out. Roku, it is a stock we played back at the beginning of the month. We had posted it as a breakout here at 32. It broke out and then gapped up, so we got kind of lucky. Now it's been consolidating for the last 2 weeks. It's really volatile. It can move a lot in both directions. So if the market does well, I could definitely see this stock, coming up here into the mid 50s-ish. If the market does really well, you can go higher. This target of 60 might be a little ambitious, but it's getting scooped up by its 50. So, if you get a little bit of sideways movement and the 50 has time to curl up, then, maybe at some point in time we'll get something like this on a 60-minute chart. All right, so that's it. Thanks for listening. I hope this gives you a few ideas for the next week or two. If you like the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers, where we provide market analysis and trading ideas to individual and institutional investors and traders. Again, thanks for listening, and I'll see you next time.